Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Campbell to give his 3 stock picks, manager of the Saracen Global Income and Growth Fund. Hi Graham.
Morning.
So what's the first stock you'd like to highlight?
The first stock I'd like to highlight is Saint-Gobain, which is a French domiciled company, but is a manufacturer and distributor of building products, flat glass and some other higher performance materials. The reason why we like Saint-Gobain is that over the last 4 or 5 years, the business has substantially reduced its cost base, taken around over 4 billion euros out of its cost base. Its sales are currently around 20% below where they were at the previous peak, and margins are around 25% below. So any pickup in sales will fall straight to the bottom line, and we expect sort of strong growth in earnings and also dividends over the next 5 years.
And what's the second stock today?
Second stock, we're very favourable disposed towards the pharmaceutical sector because demand for pharmaceutical products depends very much on ageing populations. And as we all know, as we become older, we require things, for example, diabetes, eye care, hips, knees. And the company we particularly like is Novartis, which is in three businesses. One is eye care. Secondly, it is one of the biggest manufacturers of generic pharmaceuticals. And lastly, it has a pharmaceutical business. And this whole sector has been out of favour because of concerns over US pricing and with the election, but we feel as if the long-term prospects are actually very attractive, and with a yield approaching 4% and strong earnings growth over the next 5 years, this year is very cheap.
And no Hillary Clinton coming in and bashing down those pharmaceuticals anymore. I
think there's issues with Me Too pharmaceutical stocks if the drug doesn't produce a meaningful benefit. But on things like eye care, for example, or for some other drugs that will improve length of life, and there's a strong growing market, and pharma sales typically grow more than GDP in every economy.
And what's the third stock today?
The last stock is a sector that's probably the most out of favour anywhere, which is in banking. And before we invest in any bank, we want to make sure 3 things are in place. One is they have clearly enough capital. Secondly, we must believe the numbers, and that means more than just the ECB stress tests. And lastly, the management must have fundamentally changed. And the business I'm looking at is UBS, which we hold a large holding in the fund. And UBS has transformed from an investment bank into much more of an asset management business and wealth management business. So much so that the investment bank is now only a third of sales. So the business, as it moves forward, reduces its costs, it will require less capital, and more of that capital will come back to shareholders, we hope, over the next 3 or 4 years, with a yield of almost 4%. Trading around book value, we think it's very cheap.
Graham, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.